KVB PRIME, developed for global traders, growing together with you.
Hello, welcome to the KVB PRIME weekly financial markets analysis. Now, our topic today is US stock crash encumber world markets. Firstly, we're going to have a market recap of what happened in the market and have a bit analysis of it. Then we will have a weekly market movement highlights. And at last, we will have a weekly trading strategies and ideas to share with traders. Okay, now let's get back to our topics. Now we see the major US stock triggered market circus breakers 3 times last 2 weeks, signaling the end of the 11 years bull market. The reason behind the plummet in the US stock market can be analyzed as following. Firstly, since the GFC 2008, the US Fed had maintained the loosening of a monetary policy. However, the real growth of the economy did not follow up. This created a market bubble, result in over-flourish stock market comparing to the economy. Taken for instance, the Dow Jones Industry Index in 2009 was at 6,540, and in Feb 2020, Dow was at 29,550. This is increasing about 350% increase in only 11 years. Secondly, due to the economic shock brought by the coronavirus, many advanced economies enter a slow growth. This is especially true in Eurozone, as European economy has a high chance of entering a recession. US President Donald Trump declared a 30-day Eurozone travel ban in order to combat the coronavirus. All above contributed to stagnant growth of the US. Thirdly, the failure to reach an agreement in OPEC had resulted in a price war. This was the last hit to result in the circuit breaker. On the 9th of March, Brent oil plunged 25% upon opening, with a further fall of 31%, oil price plummeted. Okay, now let's look at the similarity to GFC 2008. The reason behind the crash was easing of the bank loans, resulting in a huge market bubble in the real estate industry. Before the crash, market issue existed. Federal National Mortgage Association wanted everyone in the US to be able to purchase a house. Thus, it provided loans to any individuals regardless of their credit. This resulted high risk in defaulting. Secondly, the over-optimistic about economic outlook. The over-optimistic about the economic development and the perspective. When there was no threat, everything seems to be fine. When threats happening and appeared, the problem began to be exposed. Thirdly, market and investors panic. Panic was a major factor. In 2008, it was global panic caused by the US subprime mortgage crisis, which triggered the global financial crisis. At this time, it was the potential impact of the coronavirus of global economy. Now, the political response was difficult to determine at this stage, and the shock of the oil price causing the chaos in the current global market. Thirdly, the bubbles were burst. In 2008, the main reason of the market crash was the housing bubble burst. At present, there was dot-com bubble, tourism bubble, and the bubbles in the global market due to the easing monetary policy. Okay, it's a fair talking. Now let's have a look about weekly market movement. We saw US dollar currency index climbed last week about 2.4%, pound for over 6%, Aussie dollar for 6.4%, Kiwi for nearly 4%, gold for nearly 10%, Dow Jones for nearly 8%, and S&P for 6%. Okay, now let's have a look weekly trading strategies and ideas and see what we can share with the traders. First, we're going to talk about the American dollar. US dollar had experienced an overall uptrend channel since the beginning of 2018. Although the slope of the channel was decreasing, the overall trend maintained. Currently, the market is challenging the resistance at 100 at this time. Only by breaking this 100 position, the market can be maintained its channel opening for potentials in the market for more upwards. Now, the support position at 99 and the 98 is there to ensure this process. Next one, let's see euro dollar. In contrast, euro dollar have a small uptrend last week, had experienced a continuous down for over 2%. Now this week, it will challenge the price at 1.10. There is still a potential in the market at 1.0770, will be a strong support after falling below 1.1050. Overall, euro dollar had maintained its downtrend channel from the beginning of 2018. In order to determine whether or not the channel will remain, the market response at 1.0770 will be the key. Thirdly, we're talking about sterling. Now, the pound is very interesting. The British pound since the end of 2019, from here, experienced an accelerated downtrend after a short fluctuating downtrend channel. Now, pound quickly fall below many support and position, including 1.2750, 1.2410, and then now it's floating above 1.2020. Once the market break this 1.2020 support, it will open more potential for downtrend channel. So let's watch out for this 1.2020 price. Next one, let's have a look at the Japanese yen. Japanese yen experienced a 4.5 years downtrend channel in general, affected long term by the resistance at 112.2. The recent peak at 1.8.5. That's the market to have a better performance. Now we needed to better have a market response between these two prices, between 1.08.5 and 104.5. These are two key price boundaries that we have to keep an eye on for this week's trading. Next one is more excitedly, we're talking about gold. Now, gold price this week plunged, falling from 1,700 at the peak to 1,450, at $250 fall, or equivalent 15% from the peak. Since this week, gold did not refresh its lowest record, given it had hit the lower price twice. We expected some market rebound. Currently, the resistance at 1,600 and support 1,450 is two prices boundary that will help us determine next trading strategies in a week time. So keep an eye on 1,600 and 1,450. Last one, we're talking about the oil. WTI, as we have an example of US crude oil, after the opening gap last week, price seems to have entered what we call a new zone to trade, which is below 36. Currently adjusting at a price for over a week with no signs of rebound, rather looked like testing the strength of the support at a 27. If the market fall below 27.2 intraday, it will open more potential for another record low. On the other hand, oil price must be above 30 for traders to have more expectation in the market, close to 36. Okay, now that's all the contents about this week's market commentary from KVB PRIME, and we see you next time.